blended finance can feel incredibly confusing. There are dozens of institutions, overlapping mandates, and endless acronyms. So let's simplify it. Who actually does what in the blended and sustainable finance ecosystem? First are development agencies, institutions like Global Affairs Canada, AFD in France, and the former USAID in the United States. Institutional structures evolve over time. For example, USAID was absorbed into the US State Department in 2025, but the broader financial functions remain similar. Development agencies are the most development-oriented players in the system. They focus heavily on poverty reduction, humanitarian priorities, climate, health, education, gender, and the Sustainable Development Goals. Most importantly, they provide highly concessional funding, things like grants, low-interest loans, and catalytic capital to absorb risk and unlock other investment. Next are development finance institutions, or DFIs, such as FinDev Canada, DFC in the United States, and Proparco in France. DFIs bridge development goals with more commercially oriented financing. Unlike development agencies, DFIs operate much more like financial institutions. They often expect repayment, invest through loans and equity, and play a major role in mobilizing private capital into developing markets. Then there are export credit agencies, or ECAs, such as EDC in Canada or UK Export Finance. ECAs are slightly different. Their primary goal is not development assistance, but rather supporting trade, exports, and investment from their home countries into global markets. Nevertheless, they are important players in blended and sustainable finance, because they help reduce risk and mobilize large pools of private capital internationally. Now let's review multilateral institutions, the MDBs, or multilateral development banks, such as the World Bank, Asian Development Bank, and African Development Bank. Unlike DFIs, which are owned by a single country, MDBs are owned by many governments working together. These institutions operate enormous balance sheets and can deploy loans, guarantees, insurance, and other instruments at global scale. And this is the key takeaway. Blended finance is not one institution or one pool of money. It is an ecosystem, with different players performing different roles across the spectrum, from highly concessional funding all the way to commercial investment capital. Once you understand those roles, the space suddenly becomes much easier to navigate.